All right. Good morning, everyone. Welcome once again to Raleigh Academy, where we make daily profit. So this is the morning market review. My name is Victor. I'm going to be your host for this morning. So I think we have a few persons on board at the moment. So please, I'd like to just give out diligence to allow more persons to join this call so that we can start well. And so we'll go back and forth. You know, the usual practice. A lot of persons come in and disrupt the flow by asking to analyze one or two instruments that has been analyzed already before they came. So in order to avoid going back and forth, let's just hold on for a few minutes. But instead of holding on, why don't we just start from our fundamentals before we go to the charts, right? So let's just dive into our fundamentals. Okay. All right, so I'm sure you can see my screen right now. I'm in Forex Factory. You can see my screen. So today is Wednesday, 7th of May, 2025. And what we have for today, we've already had that of NZD. No, we trade NZD right now in the Asian session. So about midnight, that was 12:45. In fact, basically -1, so it will be 11:45 here. You see that the news was mixed. One was the first one, that's employment change. It was neutral, the same, but the second one was good. So as at that point, NZD would have been stronger based on this fundamental. But right now, you should only focus majorly on the high and medium impacts. For instance, you see all those yellow envelopes here. They are low impact news. But you see the red, they are high impact news, and these brown envelopes, they are medium impact news, right? So at least we can focus on both the high and the medium impact news. So for now, every other thing has passed. So what we're expecting for today now is the very big news for today, which is the FOMC, right? Now, the Federal Open Market Committee, these are the guys in the Federal Reserve. They are in charge of setting interest rates. And interest rates is very, very important for our currency. So basically, the FOMC usually changes the statement slightly at each release. It's these changes that traders focus on. So we're focused on the change, if interest rates is going to be increased, changed, or not. So let's see, the primary tool that the FOMC, that the Federal Market Committee, uses to communicate with investors about monetary policies contains the outcome of their vote on interest rates and other policy measures, along the commentary about the economic conditions that influence them. Most importantly, it discusses the economic outlook and offers clues on the outcome of future votes. So now this is not a data news here. So you wouldn't see figures to know if it was higher or lower, things like that. Now, these are just pointers telling us that, okay, based on the way the economy is right now, these are the measures we are going to be taking in order to remain afloat or to better the lives of people. Hence, we are going to increase interest rates or we are going to reduce interest rates, in order to attract investors or to make the currency stronger at this point. Sometimes when the currency is weak, it's possible to attract investors because when they come in, at that point, the currency is low. When they come in now, it boosts the currency at that point, becomes even better. So the interest rate is a very, very key economic indicator to show how viable an economy is at every given time. And it's also a measure with which they use to control the economy, to stabilize the economy when it comes to currencies. So the rates, this one is the dated one now. So they are going to tell us if they are increasing rates or reducing rates. So we are expecting that the rate remains constant. This is the forecast. The forecast is 4.50. All right, so if it remains the same, all good. But if there's any change, then we can see some significant some significant strength in the dollar. or significant weakness in the dollar for the next few weeks, right? Or at least the next few days. So FOMC usually by 8 p.m. Now, let me tell you by 7 p.m., please. You are still in daylight saving. By 7 p.m., that is where the FOMC kick off. You just see some massive movement, especially on instruments like USD, USD, USDPY, USDGP, USD, anything USD or USD anything. And as well as on gold, on US 100, US 30, a little bit of D30 or 40, and the likes of them. So it has multiplier effect across board. So that being said, we are to an extent, except by 10:30 a.m., that's 9:30 a.m., which we're expecting the construction PMI, the medium impact news for the Great British Pound, right? The medium impact news for the Great British Pound. Just a minute, just a All right, sorry about that. Okay, so I think connecting to a bit clear until uh, 7 p.m. tonight. So let's dive into our chat. I think we need to buy some time for more questions to join in. Okay, this is NZD-USD. NZD-USD as of last week Wednesday when we were, analyzing, and I think we were supposed to go bullish, right? Yeah, yeah, we were supposed to go bullish, to buy. As I remember putting this out here. So we're expecting to buy at this point. So this was Monday, Tuesday, Wednesday, and we're looking out for price just pushing up here. Now, unfortunately, it didn't push up immediately. On Wednesday, it came back neutral. On Thursday, pulled down, but on Friday, before the actual move started. And since Friday last week, up until Friday, Monday, yesterday, Tuesday, price has made significant moves. And in fact, it has gotten to and is that maximum point we want price to get to, which is here. Now, for those who are wondering, how did we arrive at this? Remember last week I did a bit of market structure, and I promised to, organize something about market structure. I'm sorry about that. I've not been able to do it. There's been a lot of plates right now. So, but please let me even confirm. Can you hear me? Well, since nobody has dropped no audio or anything, so I assume. But let me just be sure. Please, can you all hear? If you can hear me, just drop a yes. So we continue. Okay. Market structure. Thank you, Dynast. Thank you. All right. So Adedeji Adelana, you have something to say? Okay. Let's see. Adedeji. Yes, you can unmute if you can go ahead and ask your questions or make your contribution. Adedeji Adelana. Okay, so I guess nothing. So let's continue. My audio is not stable. Anna Yochuku, maybe you should log out and log in again or check your device. Right? Okay. Now, we did a bit of market structure and how we arrived at these were, and I think a couple of more instruments that we looked at. Let me just make my chart good again. Okay, so even oh, thank you, my audio is fine. Okay, let's see. I think we even did a bit of let me hide this floating. It's disturbing. Okay. Okay, so we even did a bit of GBP, even that of GBP USD, which you're expecting that, okay, if it doesn't go up from here, then wait till it gets here to go up, which, yes, obviously, I've done all of that. Now, let's go back to where we started from. Now, my goal, what I tend to do is not just to just come tell you we are going bullish or whatever, but I just want to show you how to analyze the chart for yourself. Okay, how to look at the market, understand it, and possibly understand what to do in the market. Now, this was what we did. So, first of all, when you open your charts, the first thing is to identify the directional bias. I mean, the current directional bias, where price is going to currently, or where it has been going to, and hoping that it continues going in that direction. So, for instance, I'm on my 1 hour, but I go to much higher time frame. So you understand your directional bias from looking at price from a much more higher time frame. So you can use your 4 hour time frame or your daily time frame. Sometimes you can use your weekly, but I don't like to go that far. So either 4 hours or daily. Now, by 4 hour time frame, you look at it, you can see that for the last few weeks, since 7th of April, price has been going to the upside. Now, if we even zoom out more, you can see that for a while, price has been, pushing up and up and up. All right. This was even since December last, all right, on NZD USD. So what I do now, I understand that price is going to the upside. I'm looking for opportunity to buy. So I come back to my lower time frame. So I start from my 1 hour time frame. Now, my 1 hour time frame, I look at the market structure. For price to be going to the upside, right, I'm looking out for something like this. I'm looking out for buys, push high. I'm looking out for retracements. Price comes back to the downside, right? Then now there are different kinds of retracement, but there's one that qualifies as retracement and others do not qualify. So for instance, if price is pushing up, then price does this. That means price just range, what we call range. It's not going up again. Let me see if I can get an example here. Okay, good. So after going up, then price started to range, going sideways, right? This is just a pause in that move and then continuation. So we call this pattern a rally-based rally pattern. Okay, so we'll get there. If we are talking about another strategy, that's what we'll talk about, rally-based rally. So, but for a retracement need to come lower. In fact, a good retracement should cover at least 50%. 50% of this move to the upside. So like half of it. That's like an excellent retracement. Sometimes you might have less than 50%, but it's okay. So I need to see retracements. Then I need to see price push higher again than the previous high. Okay, this is a pattern that I'm expecting to see. This is a pattern I really, really want to see. Then come down again and continue. So I would like to use this pattern to to look for my possible trade entry. And how do we do that? How do we do this? Let me take this one out. Okay, so if I zoom out a bit, let me go backward so you understand what we did here. I'm looking out for my significant swing points, my highs, my lows, my highs, my lows, my highs, and my lows. Now, for those who understand higher highs, higher lows, the likes of them. Okay, so this was when price was tending to the downside. Okay, price was tending to the downside. So now let's say this was a high, and this was a low. This was a low. So it means that my trading is inside of this range. This is my trading range. From this point to this other point, let me mark it again with this. So from this high where it started from to this low where I have the lowest point here. Now, this is my trading range, okay? So I am much more interested in whatever happens inside of my high and my low. Now, price did not retrace. Price kept pushing and pushing and pushing. Remember, we need some good retracement, okay? So price kept pushing higher and higher and higher until price got to this point, okay? Price got to this point, it couldn't continue that movement again. So what we do, we can look for our trading range has now been significantly increased. Now, price did a bit of retracement to this side, all right? This was more like, that low point that price got to before it broke out of this region again. Now, also when price breaks out, we are looking for significant break, not just anyhow break. So before our range was wide, now our range became smaller. Our range became smaller. Then price pushed higher again. Let me take this one out. Delete. Sorry. Okay. So let me maybe so you see that it was a good retracement. Now, then price pushed higher to this point. Price pushed higher to this point. Okay. Remember our high before was here. Yeah. Then our low was way down. Now price retraced from here. It couldn't continue going down. It now started pulling up until it broke this high. So this was the lowest point of the retracement. Now our low. Then price pushed higher to this point. And inside of that level, we now have this as our new low. All right. So then price from here pushed further higher to this particular level here. So we now have this as our new trading range, okay? Hence, inside of this range, we are looking for opportunities to buy. Now, price started creating lower highs, lower low, lower highs, lower low, lower highs, lower low. So somebody will think price is on a downtrend. That's why I marked this trend line. Price is not on a downward trend. Price is just doing a retracement. Anything that price does inside of this, your low and your high, inside of this range, right? It's not a change in trend yet. It's just your internal structure, right? So this is your external, your swing low, your swing high, there, external, everything inside is your internal. Hence, we are looking for opportunities to buy inside of the zone, inside of this range. So now the lists, how do I put it now? So there are different ways we can do it. We can use our Fibonacci retracement to do it. So for instance, if I use my Fib, usually we target below the 50% Fibonacci retracement level. So if I use my Fib now from my low to my high, I look for anywhere below 50%. Oh, this should be my high. Anywhere below 50%. So this is 50%, right? So anywhere below, you can see from here, anywhere below, you can start buying. The first time, but now the second time you buy again. The third time, if you buy again, fourth time you buy again, until sometimes it's just buys and goes, doesn't come back. And other times, let me take it out. Other times, what price will do is that it will go back to the low. So price obviously came back, retraced back all the way to this low before starting to push higher again, all the way back to the high. Now, which means that price gave us what we call a double bottom. A double bottom. The first identified low, right? Then price hit it the second time, double bottom, it hit it again. So we have triple bottom before price was able to gather momentum to push high to the upside, right? So now, one of two things will happen is either price pulls down from here or price breaks out. Since we are still an uptrend, we are waiting for when price will break out to give us another high. Oh, Mr. Danny, I just talked about the trading. Mr. It's still not visible for me yet to do. Still not visible. Right. So price has gone up. So it might decide to trace back down, or it might just continue. So whatever price wants to do. Now is not a time to buy. You can't buy this guy again. Now selling is a gamble. Selling is a gamble. You can't tell. Selling here right now is a gamble. But irrespective, since we are looking out to buy, one of two things will happen. right? So it's either you buy from these levels. This is the first identified level where you have a lot of liquidity. The price gets here, or worst case scenario, because identify this level that we can buy before, but price push lower. Worst case scenario is price comes to this level again before buying. And the worst case scenario is price comes all the way down to our low before going back up again. So it means that price will now be doing what we call a range. If that happens, price will be ranging if that happens. So from here, it will work its way back up again. So that's for NZD USD. The other way to buy here or buy here. Worst case scenario, you buy here. Irrespective, if whatever you're doing is buy, you will definitely make profit at some point. So USD card also the same thing that we identified here. It's USD card. I think USD card. Okay, USD card has been on a downtrend. Yeah, downtrend. So we are looking at selling. We're looking at the possibility of selling USD card, right? Good. Let me wind this. All right. So from our market structure, from our previous market structure, let me start from a different point. So if we have this as our high, then we have this as the low. Okay. Now price took out this low to give us, okay, price took out this low. This was a high before, this was a low, this was a high. It took it out to give us this low. Excuse me. This low. So price retraced inside, then finally took out this particular low, going further down. So the highest point of retracement was here. So have a new low here, and we have the new high over here. So which means we have a very wide trading range. Now, price did not go higher. What we now saw was that price from this low broke lower to this point. All right, so let me take this one out. Price broke lower from here. From here, it broke lower to this point right here. Good. Now, the highest point of the retracement when this was the low was here. So which means we now have a small range. Now, you trade based on how price is moving. You're not just trading based on how you feel, what you want to do. You are constrained by what price does. Okay. So now, if you can see, it's significant because my chart was, so these are low, these are high, these are new trading range. Okay, these are new trading range. Now we're obviously expecting to sell. So remember, if we are to follow that principle of Fibonacci, now we are looking for sell. So if we were to apply our Fib, we apply from high to low and wait for price to go above 50% from high to low. Okay, now if we wait for price to go above 50, you see this is 50. Anywhere above 50, we want to keep selling from. So you'd have seen that this is a very good strategy, right? Very good strategy to use to trade any instruments that you want. So sell, sell, sell. Price is breaking this point, but not breaking it convincingly yet. So we don't have a new low at the moment. So all that can happen here is sell, sell, and sell. So we are still actively selling USD card. We are still actively selling USD card. Let me see if I still have my good. My low is still here. Which price is attempting to break, but not yet convincingly, because right about now it's still back inside my zone. So if at all we have any opportunity to sell again, rather want to be selling from this point. Rather want to be selling from this point here. This is one, or we'll be selling from this point here. So now basically they just line on top of each other, irrespective. If you wait for price to go up here and you sell, most likely you would have your trade going in profit in no time. All right. So because we need to create a new low. So this is for USD card. Meanwhile, if you miss anything or you're not understanding fully, this video is being currently live streamed on YouTube. I'm sure some people are just on YouTube right now, not on Zoom. So you can go there. Please, whatever you want me to do, explain more, just drop a comment and let me know what you want me to do, what you want me to, how you want me to, or whatever challenge you still have. How, if you don't understand it, whatever questions you have, just ask your questions. Yeah, and for those here on Zoom, you can just type a message, and let me know if you're understanding this or not. So USDJPY. Now USDJPY has been giving us this support because this is going to be very interesting. Let me see. And I noticed that of late price has been tending to downside again. The daily AI wisdom, the daily time frame structure is showing higher high, higher low on the USD IDX. I'm not talking about USD IDX. I was talking about USD card. When drawing a trend line, do you include the weeks? Okay, so at it is but almost if you want to draw a trend line, you either do week to week or body to body. You have to be consistent. You have to be consistent, all right, week to week or body to body. So, for instance, if I want to do a trend line for NZD USD right now, okay, so yeah, good. So notice me, I picked it from week to the next week, all right. Now, is the first week and the second week. Every other thing is inconsequential. I started from the first week, I picked the second week. If I'm to do body to body, I'll start from body, right? Body, not the week now. Then I'll obviously bring it to the next point, body, not the week. So my trainer would have looked something like this. So my trend line would have been serving as, so at this point, price would have broken my trend line and I'll be looking for buy. So I'll be looking to buy when price retested my trend line at this point. Okay, good. So sometimes your trend lines, that's why I have multiple trend lines sometimes on my chart, because some of the trend lines is to tell me when it breaks, where it's going to retest and continue, things like that. So, but if you do week to week or body to body, that is how you draw trend line. So this is week, then you extend like that. Others don't necessarily need to now fall in place. Just from where your origin is, where you want to start drawing it. Then the first hit that you now have, all right, make sure you take the week and extend it like that. Don't try to fit it to all the weeks. It won't work that way. It won't work that way, all right? So your trend line at that point is balanced. So this is your good trend line right now. And if I am to draw this trend line right now, to know when price breaks and if price will be coming to the downside. So I'll start from week to this week, from this week to this week, right? Then I extend it straight like that. All right, this is a good trend line, which tells me that price hit this point. It broke at this point, came back inside, came back inside. So if price convincingly breaks this point, which it's doing right now, I'll probably want to be selling NZD card right now. But remember, I told you selling this is a gamble because this is currently in an uptrend, right? So, but irrespective, price can decide to come down first to some level before it pushes high again. So I think let me even go in for a sell on NZD card. So just a moment, NZD USD rather. NZD USD. Okay. So let's see how far that will go. Since I'm expecting price to drop to this point, to drop to this point before price pulls up again. So perhaps I might not wait too long. If I'm in profit, I might not wait too long. Okay, so that's one. So I think that answers your question. So where were we? We've done NZD, we've done USD CAD. We're doing USD JPY, yes. Okay, so we're doing USD JPY. Now, I said this guy is very interesting right now because from precedence, you notice that this guy, first of all, was on a downward trend. First was on a downward trend. Then price now broke structure, which is we had this high and we had this low. We had this low. Okay, now price retraced, and if you use your fib, that's why I would also like to look at the fib sometimes. If I look at the fib, sorry, this is a downtrend, so it's supposed to be from high to low. I'm coming. So if you do from your high to your low, and you wait for price to retrace 50%, so guess where it starts? Anywhere above 50%. You can see the moment it got above 50%, you sell. The moment it got above 50%, you sell. Very, very easy strategy. You know, the simpler it is, the better it is actually. Can we not buy before selling in USD CAD and USD? Yes, you can. I just mentioned that if you do, it's a gamble, right? It's a gamble. That's not the real direction we expect price. That kind of trade, you can't really wait for it. Okay, you can't really wait for it. Because price might be you're going in profit now before you know all of a sudden it just reverses very swiftly. Okay, so now I'm just showing you some of the things that work because apart from market structure, we now use this is where you now use your simple tools. I think last week we did like, was it moving average? No, I don't think it's moving average. Even if you use your moving average, yes, you make profit. Now this is how it's being used. You know, like I said, you can go back to this video on YouTube. Just let me know what you want me to talk about next or question. So for instance, I identify my high and my low, and I'm using moving average to trade. How do I use moving average to trade this? So let me apply moving average first, then I'll show you. So let's say I'm using moving average 21 or moving average 21 and 50, irrespective of the moving average rate. So let's say you're using just even one moving average like this. Now, when price this is the direction of the price should be below moving average. Now, when price identifies a low for me, for that retracement, for the retracement I'm expecting before price continues to the downside, I want to sell again. This is what I want to see. I want to see price, first of all, go above moving average. So if you use moving average, and just because price went above moving average and retested, and you want to start buying, hoping that it will continue buying in a downtrend, no, it will most likely not. It will most likely not. Right? So you use moving average alongside the direction of the trend. Hence, if you want to sell, wait for price to be below moving average because you are looking for sell opportunity. For price to break below moving average, it means that retracement is over. Price want to now start going back to the downside. One of two things. In fact, sometimes you can even not wait for a retest. The moment it breaks below moving average, just go in for yourself and put your stop loss above your moving average again if you use your stop loss. Or you wait for a retest like this. The moment it's going back down, you enter your sell at that point if you have the time to wait for it. Okay? Because sometimes you can't do pending orders with moving average because moving average is dynamic, it shifts, it moves along with price. So it's difficult to use pending orders for moving average. But if you are looking at it, the moment it breaks, you can go in for a sell, or you wait for it um, to retest again if you have the time before selling. So in this case, probably I would have entered myself from here. The moment it breaks below again, enter yourself. Even though you retraced a bit, in the long run, you still come back to profit. Now, price didn't break at this point, it went back up. So hence, it will go above moving average. So if you now say because price now retested and you want to buy only one candle before you know against you, price breaks again. So the moment it breaks, you can enter your sell again. You can see how many pips you cover again in profit. And this was the time where price now broke moving average and broke structure and keep going to the downside. So all of these strategies. All of these are indicators like your moving average, your Fibonacci, your RSI. They are good. You can use them. But the problem is you are using them individually. You are using them as the sole entity to determine if you buy or sell. No, there's a conglomeration of factors that comes to place to help you now determine. So that indicator is the final bus stop. It what gives you that signal to now enter or not to enter. Okay. So that being said, now let's continue this because, like I said, um, USDJPY is interesting at the moment because price broke structure. So in this retracement, the moment this was the highest point of the retracement here before we have a new low at this point. So this is our new trading range. Now you can see that we didn't have that much of a retracement because price didn't go really far above moving average before it broke again. So in this retracement now, this is the highest point of our retracement. So which we now have at our new high. Then price broke it to this level all the way down here. So these are new range. Hence, price breaks above, which is normal. So we are expecting it to break below for us to sell, right? Break below, you sell because we were still in a downtrend. Now, price then broke above moving average. Sorry, price then broke above our swing high. And whenever price does this, it tells us that the retracement is over, right? The retracement, sorry, price has changed direction from being a downtrend now, so from being a downtrend now to an uptrend, okay? So inside of it, this is our new high. Let me shift this. This is our new high right here. And so let's say we are now buying at this point here. This was the lowest point of its retracement. So this very point right here. Okay. So it means that our new trading range is here. Hence, we are looking out for opportunities to buy again. So how do we do it? Very simple. The moment price crosses above moving average, we are going in for buy again. Because now we are in the uptrend. So our moving average should be in our favor. Have you not noticed now that your moving average stays way spent a lot of time above price spends a lot of time above moving average and spends less time now. So the moment price, this is now the retracement to the downside. The moment it breaks above now, we are buying. In fact, some people, the moment it broke above and retested, some persons are already on the buy. Okay, so this is for USJPY. Very easy, very simple right now. No long story currently. All right. So USJPY are going long. Wow, our time is fast. Now you can apply the same principle, please, on everything you're trading, every single thing that you are trading. You can apply this simple principle, right? You know, it will make a lot of sense for you to do that. All through yesterday buying this, and I think today it will continue buying. So USJPY, yes, we're still being bullish until it gets to this point. Then let's go to our daily below. Okay, gold. Now, when we are talking about gold in this instance, you need to tread a bit more carefully when you're dealing with gold, okay? Because gold can be much more volatile. Currencies, yes, they are volatile a few times, but for most time, they just move quietly, right, to a particular direction. But gold can, can just turn on its crazy mode and move. It's either a move, you see massive profit or you see massive loss. Hence, it has been trading to the upside for a while, right? So if we follow this same pattern, very easy pattern. Okay, let me make sure I'm placing it at the right point. Okay, so this, I need to identify that retracement first. I need to make this smaller. My screen will not capture this much wide area. Excuse me. Okay. I think it's the best if we start from somewhere around here. So we'll have much more perspective. So this is my 1 hour time. Now we all know the direction has been looking to go bullish, right? So this was like a low, then a high. Retraced, broke the high to give us a new high. Now remember, there's a difference between retracement and uh, ranging. This is not retracement. This is not retracement. This is just pure ranging. Okay. So now price gave us a new low, and our high was now very high, like very high. This is our high. So we have a massive range, like a massive range to trade gold. Okay. So let me now shrink this chart so that I'll see my low at every point. So everything that price was doing here was retracement. Now price, this was the lowest point of retracement before price broke this high to give us a new high. Okay, this was the first time, yeah, broke it to give us a new high. Hence, would have been buying from here, although price broke it a bit, but not convincingly. Then price came back inside again. So our uptrend was still valid, right? Our uptrend was still valid. Then price took it out, sorry, broke it again to give us a new high. That means we are still maintaining this low, right? We're still maintaining this low. A little bit of retracement before price. Okay, a little bit of retracement. How many are these? These are plenty. Whoa, I've deleted that. Okay, so well, basically, the price came, give us a new high, and obviously, we will then have a new low as at this level. Because if I adjust my charts, see, okay, so price then give us another high, and then the lowest part of the retracement was at this point here. Okay, which price was bouncing off, then finally it took it out. So this is convincing, right? Price was staying at the low, I was expecting it to break out my trend line first. If you notice week to week, breaking it, waiting for it to break out, so I will know price has momentum to push higher. Finally did that, but before it did, price gave us a low. So it did give us a new low, suggesting that price wants to start going to the downside. Now, after having given us the low, from when this low, the highest retracement was around this level. This was the highest point of retracement. So this was supposed to be our new trading range. So I've been looking for sell opportunities, all right, to sell. So here comes the difference in gold and other instruments. Now, gold itself, the respect it has for market structure is less. If you want to be more accurate on market structure, you are not going to be doing it on 1 hour, you're doing it on 4 hour time frame, on your much higher time frame. Even apply a Fibonacci or your moving average. I think I talked about one time where I use moving average, but on a 4 hour time frame. Okay, so now price broke to the downside. So we were looking at it, okay, the downtrend. Now it has broken our high again. So if you have been selling anywhere around here, just know you would have lost money. Okay, you would have lost money. Hence, this is our new high. This is our new trading range. So whatever is happening now from here, from up here all the way to the downside is retracement. All right, retracement to the upside. So if you see gold selling, it's only doing retracement. It will go back up again. And guess what? It will go back up massively and get back to the highest point and even possibly create a new all-time high. All right, this is what I'm anticipating most likely is going to be happening. So at least let's see if it will do it for this month of May. Most likely. So you can see for like maybe a day, 2 days, even 3 days, gold might come all the way down, after which it starts its movement to the upside again. So now, remember, the retracement to the downside, I don't know how it will happen. In fact, I don't really care how it will happen. Mine is that I'm just looking out for points where I can buy. And if you ask me, I'm looking out for points where I have places where I have some form of liquidities, right? Places where I have some form of liquidity. I have one here. Good. I also have another one here. There's one here, but it's too close. Most likely, if it's going to do that, it will come all the way for this one down here. And the last point, if it breaks here, then I just wait for it to get all the way down, then I start buying again. Meanwhile, for this retracement now, there are ways to catch retracement also. There are ways to catch retracement. So if we put it this way, price can come here and stop. But if you want to catch the retracement, this is not going to align well with trend line. So let's put it this way. If gold can break below this level, then we will most likely have a good retracement on our hands. If you can break here, which is attempting to do right now, then we most likely will have some good retracement on our hands, all right? Or on our 15-minute time frame, has. So most likely gold is coming all the way down to this liquidity points right here. Okay. Meanwhile, remember, it is just a retracement. And please just head over to YouTube. Anna, you don't have time to start analyzing your JPY again. Just head over to YouTube, all right? GBP JPY, I was expecting it to pull up yesterday. I was on a sell. Unfortunately, it had to hit my SL before starting that sell. I'm sorry, I was on a buy. Unfortunately, it had to hit my SL. My SL was tight. I just left it. When I came, I just saw it hit my SL before going back to the upside. I was on a buy around this level. I was on a buy around here. And my stop loss was somewhere around this level. Okay, yeah, somewhat around, I think I put it somewhere around this level because this was the candle, the second one that came to take out my stop loss. So after taking it out, no, this was, I put it slightly below, I think around here. So this was the candle just before I slept. This was the candle that took out my stop loss, this one. And immediately it did start going up. So sometimes these things happen. And it was because I saw it, but I refused to change my stop loss. After I did, the next 2 hours, you can see how massively. So, yes, guys, GBP JPY, we are buying it up again. Euro JPY, GBP JPY, I expect them to be bullish today, especially because JPY is down and the GBP is currently stronger. If it breaks this particular level, it's going to go higher. So, if I want to see when price break and we have much more momentum, so, okay, let me start it from here. Price already broke. And that was why I went for my buy. Price already broke above, so I waited. So then I went in for my buy, but it came down to do a retest and came massively, So, but yes, in the long run, still buy. If it didn't hit my stop loss, yes, I would have been in profits, right even now. So yes, we can continue on that particular activity. So let's just quickly round up with our indices, US 100. I'm expecting some, okay, I was expecting some retracement US 100, which to me, I think it has done. Anna Yochuku, I said, please go to YouTube and watch it. Our time is fast spent. We can't go back to analyzing it. This same video is on YouTube. Go back and watch it again. So you'll see the analysis on USG. I'm so sorry. We can't start analyzing again. And we had to try and wait for people to join it. So you missed it. And You said your network was bad. Just go to YouTube, please. Okay, so US 100. Now, when I deal with these guys, I deal with them from a higher time frame, even our daily beloved group. Now, so you notice that we've been having some significant downtrend. Now I'm on the 4 hour time frame right now. Okay, because this is, I want to look at the long run picture. Okay, so price hits this level and retraced all the way to this point here. Okay, this is like the high. Then it came, it took out this low to give us a new low. And before it did, this was the highest point of retracement, this level where price is right now. And came all the way down to this low. So our trading range became massively wide, massively wide. So you will see that whatever price is doing right now is just around the previous, the high. And we are expecting it to pull downward. So this is where trend line now comes in, to see how we can catch ourselves. Okay, so this is week to week, and it perfectly aligns here. I just draw it straight. It perfectly aligns here. So I'm still expecting some downward push. Yeah, I'm still expecting some downward push on a much higher time frame. Okay, but I needed to start creating lower lows for me before we start selling this guy. Okay, I'm still expecting it to push lower, okay, to push it. Although, have it at the back of your mind, gold indices, they have a natural uptrend. So whenever I want to sell, I am very careful. Like I put, except I see that this thing is really want to sell, and if I'm on a sell, I don't wait too long. But if it's a buy, then you can wait it out. In fact, I can leave the trade and sleep. I can just tighten my stop loss or come to break even if I'm already in profit. Then I sleep, hoping that the market should do what it naturally does and just keep pulling up. Then I wake up to much more massive profits. But if I'm on a sell, I don't just sleep on it. I possibly want to take it out first. Okay, so this is for US 100. I'm still expecting some significant downward retracement, at least even to come and retest our trend line, right? Or even break below. So, it depends on how, for trend line, it depends on how the market does it. So one thing I would like you to understand is that a lot of things that we do as traders, if you really understand this market, is that the market does the same thing over and over again, but it does it in different forms. It does the same thing over and over and over, but it doesn't do the same thing the same way. It's more like if someone wants to slap you, just slaps you, slap the mouth, slap the ear, slap what, they are all slaps. You want to play a free kick, you can decide to play a shot, cross it. It's the same thing. A free kick is a free kick. Either you try to shoot it, cross it, whatever you want to do. So just understand the basic principle. Then try to figure out price did this thing or not. Okay, in which form? So it's whatever price does determines how I will follow it. So if price, for instance, as at the point I want to draw my trend line, let me go back to my 4 hour time. I want to draw my trend line. If price did not give me these wicks like this, then obviously I will just concentrate on the body. But for the fact that price did this week, it means that wicks are going to be significant. Okay, wicks are going to be significant. And if I want to do it body to body, it might not make too much sense. So you just look at the one that makes sense. So body to body. So you notice that price has not even come there. But sometimes I do body to body, week to week on the same chart. Okay, body to body, week to week on the same chart. So you just look at how price made that move and which one is more dominant. Is it that we have more wicks or we have more of just body? So that determines which one I am going to use at that point. So price determines my action. So I like you to adopt it. I think it's better that way. So thank you very much for your time. I think I'm sorry, I don't have much time to spend with us because I need to finish exactly now because I have another meeting. Modest, Odo. Modest. Okay, quickly, please, Modest, just a few seconds. Let me unmute you so that you can just give your contribution. All right, unmute and go ahead.
Hello, sir.
Oh, yeah, ma'am.
Good morning, sir.
Good morning, madam.
Yes, sir. Yes,
Yeah.
sir. Well done, sir.
Thank you so much.
Sir, when are you going to fulfill your promise? Because I'm the market strategy.
Yes. I don't really want to promise that much, except we are going to do it on a different time that is not really going to affect, because we have a lot. We really do have a lot. I can't, to be honest with you right now, I can't give you a specific time. I'll need to try the
If possible,
specific time.
if you create time, if you create time and tell us, we will join you.
Okay, so just let me just give you my, let me drop my contact so everybody can get it here. So when I have the time, I just communicate it to you. You can just reach out to me on WhatsApp. I'll just communicate the time, all right? So
Thank
I
you.
think you're welcome. I think let's do that right now. So if you want to take it down, 080. I think some of you have it already. 00265 824 93. 00265 824 93. Okay, so I think we're good there. All right. So thank you very much for your time. Really have to go. I have to go right. So wishing you a very peaceful and productive day. So it's also on WhatsApp. So you can just reach out to me on WhatsApp. So when I finally have time, then I'll just communicate it and we can go ahead. Thank you very much. Have a lovely day.